Hello everyone and welcome to another episode of Traders Classroom. Today we are going to discuss a very important concept that is always overlooked by everyone, and you will see the advantages when we do this. The trades that we get is are very good risk reward trade by using this thing that is called the multi-time frame analysis. Now what is multi-time frame analysis? That means we will be looking at three time frames basically to filter out our trade. So one of the most important things required for trading is to know what trades are doing and the other time frames, right? So sometimes when you will go to the hourly chart, you will see the trades are or the trend is moving upward, upside, right? But when you switch onto the daily chart, you may see that this trend that is going upside like this, or the trend that is moving forward may be going at a resistance zone here, right? Or on the weekly chart it may so happen that the RSI is near the 60 zones. So looking at only the daily charts, if we enter the stock, or looking at the hourly charts, if we enter the stock, then we are going to lose on the daily charts and the weekly charts, because the weekly charts and the daily charts are bearish, though the hourly charts looks bullish. So taking trade based on one time frame is not what we are going to do from today onwards, because if you are trading with the trend, right, if you are expecting a profits of big profits, and if you are trend trading, right, when you are willing to carry your positions for a good considerable amount of time, for say 2 weeks, 3 weeks, 4 weeks, so trend trading must be done with three time frames. That's very very important. You must keep it in mind. The most favorable time frame for getting on good trends is weekly, daily, and hourly. It's very important to follow this tree trend when you are trend trading, especially. And when you are doing it for intraday, then I'll suggest daily, hourly, and 15 minutes for intraday. But what I prefer is this, because I am a positional trader, and if you are a day trader or a swing trader, then this is your combination. Keep this in mind. Now how what method is employed basically is what is it is called the TPB method. That is the trend, P for pullback and B for breakout. The TPB method is trend, pullback, and breakout method. Now let us look what are these. So trend is ascertained on the higher time frame, right? So if you are a positional trader, then the higher time frame is the weekly time frame. So the larger trend or the bigger trend is ascertained on the weekly time frame. The trend on the higher time frame must be the dominant in direction. That means anything that you wish to trade may be having a trend, and on the weekly chart, suppose the stock should be having a dominant trend. You can figure out the trend easily, whether it is an uptrend or a downtrend. Now this can be ascertained at looking at RSI, like RSI is in the bullish zone or the bearish zones, right? So on the weekly chart we will look at the RSI and see in which zones the RSI is traveling. If it is traveling between 80 and 40 zone, then it is quite evident that RSI is in the bullish zone, right? And if it is traveling between 60 and 20 zones, then it is quite evident that the trend is in a bearish zone. So we can use RSI to ascertain this, or you can use the price action also, right? You can use the moving averages also. So once the trend is ascertained, we are going to trade in the direction of the main trend. That is more important. So if a trend is ascertained, right, if we are making higher highs like this, so this is a uptrend, so we are going to take long trades only, right? So this gives us the direction of the trade that we are going to take. The intermediate time frame is the time frame where we trade and wait for the pullbacks. Now this is very most important, right? So once the trend is ascertained, Now a trend never goes in a straight line like this. It gives you pullbacks. So suppose this is the weekly time frame and we see the trend is going upside, right? Now the trend is already on the upside. We know we have established the trend. Now we will wait on the daily time frame for a pullback. So we will wait for a retracement like this. Alright, so this is the daily time frame for positional trading, and here we will use RSI segment, range rules, Fibonacci moving averages to ascertain support and resistance. So what we have to ascertain here, now on the weekly time frame you have ascertained that the trend is on the upside. Now we will switch on to the daily charts and we will see whether a trend is retracing on an important Fibonacci levels, or a trend may be taking support at the moving average, or even the trend may be taking support as at the RSI 40 levels if we are bullish, right? So we will wait for the trend to pull back on the daily charts, right? The trend is on the upside on the weekly chart. Now we will wait for a pullback on the daily chart. We will wait for a retracement on a daily chart. We will ascertain a support area or multiple support area, and we will wait for the prices to come down at that support area, and we will see that how the price will be behaving at that level. Now this time frame is the base for the trading now, because we are basing, the prices are basing here, and so this is called the base time frame, and this is the most important time frame you should keep in mind, because daily time frame, you see most of the people who are into positional trading are using the daily time frame, so it's quite important. The lower time frame will be used as a trigger for trade entries. Now hourly time frames will be used as a trigger for trade entry. We will use breakouts from the important resistance levels or fractals to enter a trade. What is this fractals? We will come to this in our following sessions, and I'll explain you what is fractal. For this session, you just keep in mind that we will use breakouts from important resistance to enter the trade. This will help us getting in more probability on our side. Now waiting for breakouts will help us to get more probability on a trade. So what will happen? We have to use a 4-hour charts for the commodities. If we are trading commodities, we have to use 4-hour charts. If we are using currencies, we have to use 4-hour charts, and if we are using stocks, we will use hourly charts. Okay, so this is for ultra long term traders. As I told you, if you are trading for like investment purposes, if your purpose of investment have a purpose of investment, right, you want to carry your position for multiple months, then you go for the monthly, weekly and daily charts. If you are a short term trader, then daily, hourly and 15-minute chart. And if you are a trader that is a positional trader and does not if you want to carry your position for a few weeks or basically a few days, then you must go for the weekly, daily and hourly charts. So this is the combination. So suppose, now what is this? Suppose we have seen in the weekly chart the trend is already up. Alright, we'll wait for the hourly charts to pull back. Now we are waiting for this pullback. We get this pullback, and on the hourly chart, sorry, this is the weekly chart, this is the daily chart, and on the hourly charts we will wait for a breakout from a resistance level like this, and we will enter on the basis of this thing, on the basis of breakout from the hourly charts. So this is the way multi time frame analysis is done. Now let us look at a chart. So this is the monthly chart, right, and if you can see, the trend is on the downside at these levels. We have made out the trend. The trend had started to make lower highs and lower lows, so it's quite obvious that the trend is going to be down. And if you see the RSI 3 of SMA 3, it has failed to move to the 80 zone. It is also an indication of bearishness. right? And if you see that this is a surge move, as we have discussed in our previous session. What is the surge move? So it gives us a quite evidence that the charts are bearish here. All right, now as we move forward, we'll wait for a weekly pullback. Now, because this is ultra high, what I'm talking about, it's a very good positional trade type of sort of thing. So we are using monthly, weekly and daily. So on the weekly chart, we wait for the pullback. You can use the same concept on daily, hourly and 15 minutes, weekly, daily or hourly charts. Not a problem at all. So this is the weekly chart, and we wait for a pullback on the weekly chart. So the trend is ascertained. On the monthly chart, the trend is down, and then we switch on to the weekly chart and we'll wait for a pullback. Now what we will do, we will switch to the hourly chart from here and we'll wait for a breakout. Now this is the place where it broke out from this resistance and the price has drifted down, right? So this is how multi-time frame analysis is carried out. It's a very important concept to understand, and without this concept, if you are trading, right, you are really not taking the full juice out of the trend, or you are really wasting your time there. Because if you are not using multi-time frame analysis, you are not really giving in 100% to your trading. We'll now in the coming sessions, right, in this class, in this traders classroom, I'll show you concepts on multiple time frame analysis using only RSI, right, and you will be astonished to see that how it works, right, and you will from 10 on, I am very sure that you will stop trading without multi-time frame analysis, right? So this is what multi-time frame analysis is all about. Now let us look at some of the stocks that we have discussed before and how they have behaved, right? So if you have remembered, we have discussed about the IT stocks, right? So what the IT stocks are doing, let us have a look. So we discussed about Infosys. Just give me one second. This is Infosys futures. So we have discussed about this in the traders classroom, that it is going weak, and what it has done is this corrected very severely. We discussed about TechM, and TechM has also corrected. We have discussed about Wipro, it has also corrected, and we have discussed about SCL, and it has also corrected. So this was some IT stocks that we were discussing. And ADX trade, if you remember, we were discussing some ADX trade. Apollo Hospitals, right, we discussed Apollo Hospitals, this has corrected, and I don't remember actually what else we have discussed, because these were the trades that I was trading, I was into them, so that is why I am remembering it. So this is how things go. Larsen Turbo was one trade that has really shocked me up. It's a very good trade that we remember. If you remember that we discussed in our initial classes, right, that there was a negative reversal. Now this negative reversal failed and this stock went up. Now we will also discuss in the coming sessions to play this failure. Now this is one of the best setups that I like, when a setup fails, and we'll discuss this surely in the coming session. Just stay tuned, and we'll see how you can catch this type of moves by using failures. It's very good type of trading and very good practical application that you are going to learn in your trading, that you can apply it on everyday basis. So this was multi-time frame analysis, guys. Do try it with your charts and do try to observe it, and I think that it will be very fruitful for your analysis. This is Bharat Junjunwala, and I'll be again up with a new concept in the next video. Till then, keep earning, keep learning, and Jai Hind.